Hey everyone, welcome to the May 2022 market report for Calgary. I'm 𝙍𝙤𝙗. I hope this video is helpful for you. I do them every month. Just to give you an introduction to what's going on in the market, it's a well-known fact that interest rates have been impacting the market since the Bank of Canada started raising rates in the month of May. They raised them again in early June, and they've definitely continued to have an impact on the market. It's a little frustrating for us in the real estate business because Alberta has finally seen, blue sky. Things are good. We have a better economy. We have unemployment rate is just down, I think, just above 5%. We have, high commodity prices, both in oil and gas and in the farming sector, ranching sector. And this is all good news for Alberta. And then, of course, we get hit with higher interest rates. So it's definitely caused the buyers to take a step back. I think you're going to see a lot of these buyers do have locked in lower rate guarantees that will last 120 days. And that'll start to dry up probably in early August. And I think that's where we might even see a bigger slowdown. Although if you are buying, I can tell you from having Richard Anderson, who is, he owns Mortgage Alliance in our brokerage, or one of the franchise owners of Mortgage Alliance. And he said that adjustable rate mortgages and variable rate mortgages will probably be the product that people will go after, because if you're looking at a 5-year fixed, you're going to be probably over 5% by the fall. But you could be into variable rate mortgages that are still in the 3% range, and they do have some caps on there so that if the market changes, you're not going to be affected by higher rates by the Bank of Canada. So definitely reach out to me if you have questions on mortgages, and I can put you in touch with somebody who really understands them well. And it's maybe not all bad if you'll actually learn the options that are available to you. Let's just take a look at the market. You can see 63.48% is the absorption rate. So you can see we're going in the wrong direction. When you look back last month, we were at 75.27%. So that means almost 64% of the detached houses. We are looking at detached houses here. Those are the ones that have sold in the month of May. Interestingly enough, though, prices still went up at 648,500 is now the benchmark price for a Calgary detached house. So it goes to show that there's still a significant demand, and quite frankly, at 63.48%, that is still a very healthy market. It's just not as crazy red hot as it was. So to put it into perspective, you can see that there was 2,552 listings, 1,620 of them sold. So that's still a really strong seller's market, and that's why you're still seeing prices rising. We'll see how it plays out in the month of June and so forth as we head into the fall, which I think is going to be a little bit slower, but we'll see. Anyway, average days on market, 22 days, so it's not taking very long to sell a house. If you're on the market longer than 22 days, it's not always price that's the issue. Sometimes it is just the right buyer has to come over. I know I have a couple of listings right now that are not moving as fast as we'd like them to, and we do question price. Price is always a factor, but always keep in mind that sometimes the right person has to come in and fall in love with the property too. Let's look at market distribution. And you can see now, amazingly enough, the 300 to 400 is only 5.75% of the market. So it's almost impossible now to get a detached house under 400,000. Even from 4 to 500, just about 18% of the market. You can see that this is slowly becoming a thing of the past as well, where the starting prices now for detached in Calgary really are hitting about 5. And 5 to 6 is our strongest market at 24%. And 21% is creeping up all the time from $600,000 to $700,000. This is a very, very active market. And no wonder. the prices for the median price is $648,000. And then, of course, 7 to 800,000, 12.63% of the market. And as I always look at the $1 million to $1.5 million, the luxury market, well above 5%. There's still a lot of people buying luxury homes in Calgary, and that's a good thing to see. So this is still a very good market to be selling. And I would say if you are looking at selling your detached house and you want to take advantage of this market, I think it's going to be quite strong until August, where it might slow down a little. But even then, it's hard to say because our economic environment is so good. So let's take a look at the semi-detached market. These are attached properties that don't have condo fees. And this is, amazingly enough, it's about as strong as the detached market, which was not happening a couple of years ago, I can tell you that. 66.08% absorption rate. That's a really healthy market. 584,700 for the benchmark price. And you can see that's that just continues to climb. I mean, we're up considerably year over year when it comes to pricing. A whopping 19.84%, to go back in the last year is quite an incredible amount of money for this market to have moved up that high over the last 12 months. I wouldn't have suspected that. If we move into looking at the hard numbers, it's 265 out of 401. So that's a really healthy market, and it just goes to show that there are a lot of people that don't mind buying an attached property. Semi-detached is becoming the kind of the new normal now, especially in the inner city. People are comfortable with them. They make them well. They're soundproof. I wouldn't be afraid of them. But also, for even if you're moving down to areas like Auburn Bay or Mahogany, you can get into a semi-detached for a little bit more affordable price than you would pay for a detached. Especially if you look at the the price points. You can see 300 to 400,000. You can see is the strongest part of this market. So this is why it's more or less the second choice for people that are looking to buy a property that doesn't have condo fees. But it's quite impressive to see that 400 to 500 is 20.41% of the market. 500 to 600 is 16.87% of the market. So really, from all the way from 300 to 600,000, I mean, take a look. That's more than half of the entire market for semi-detached is under 600,000. So that's pretty impressive. But then as you move over to 700 to 900,000, combined, you're looking at almost 20% of the market for semi-detached. So this market is really healthy. These are pretty much all, for the most part, inner city semi-detached properties. So the townhouse market is also staying really strong at 66.79% absorption rate. So these are attached properties, otherwise known as row houses, that usually have condo fees associated with them. And our benchmark price is $363,300,000, up 5.92% month over month, and a whopping 22.57% year over year. That's really significant in the last 12 months. And if you take a look at the hard numbers, 555 sold out of 831. So I mean that's almost all of them when you really get down to it. 24 days on the market, and our market distribution here, you can see 300 to 400,000, 42.41% of the market. And I find with these townhouse type or row house type condos, they're just really popular for a few different people. First of all, investors really like them because when you're buying in that price range, you can get the numbers to work for renting them out. People who have gone through a divorce like them because it's you have a small backyard. It's keeping the price down, but you also feels a little bit like being in a house, and also just young professionals seem to like them as well. So, but you can see, I mean, it's pretty much the whole market is under 500,000. There's not very many that once you break 500,000, you can see that the numbers just drop right off. But really good product. for those reasons, and that's why they're really popular, and I would suspect that they'll continue to be popular. So here's the apartment condo market, 44.56% absorption rate. So that's down a little bit from the 50.43% that we saw in the previous month. Our benchmark price at 275,300. You can see that we're slightly up on price, 1%, and almost 9% year over year. So we're continuing to see pretty good, strong growth in the apartment condo sector. And why not? This is a market where a lot of first-time buyers like to get in, or people downsizing. That's primarily who buys most of these. You do get some investors buying them too, but that's your biggest market is first-time buyers and people downsizing. You can see here that we're still not quite where we were. If you go all the way back to 2014, 292,400 was the benchmark price there. That's where we peaked, and then it was just a bloodbath all those years where the condo market really just tanked. And but we're climbing up. I mean, at 264, we're getting there. So if this continues, I mean, I think within 12 months we could really be back to the 2014 levels. Here's the hard numbers. It's just a little blurry for a second. So 631 out of 1,416 sold. Still a pretty good market when you're anything over 40% absorption rate is actually a good market. 34 days on market to sell an apartment condo. And you can see that our strongest market is 200 to 300,000 with 46.14% of the market. And then 300 to 400,000 is 19%. So you can see that under 400,000 really is our strongest market for the Calgary apartment condo market. And I don't think that is going to change too much over the next little while because, prices would have to be going up a lot higher yet. But again, keep in mind, the investor market is still good for this. The first-time buyer market is good for it. The downsizing market is good for it. So consider that if you're looking at condos. Let me just wrap up this video by giving you an invitation. If you're buying right now and you're trying to make some sense of whether this is the right time to buy, I think you're going to have to factor in interest rates versus price versus economic environment. And I think breaking that down is going to be a little different for everyone, but feel free to reach out to me and I will make some sense of it for you and be able to show you some mathematics that might help you to get off the fence as to whether you should keep renting or whether you should be buying. If you're looking at selling and you're trying to really determine right now is the right time, should I sell before these potential interest rates go up, or what impact could that have? What is my current value right now, the way the market is? Just reach out to me as well. I mean, I provide all of this information to both buyers and sellers free of charge. I've never charged for that. I don't expect anything other than being able to give you that information so you can make a good informed decision. I think everybody needs to know well, I think first of all, they want to hear my opinion too, but they want to look at the hard numbers and they want to be able to see where the market is and whether this is the right time. And I think that information has to be provided for you to be able to make those decisions. And I also give people advice on some things they can do if you're selling. I mean, repeatedly, I mention this every month, but every single time, it's amazing the small things that you can do inside your home. And if you spend it in the right area, I promise you, it pays dividends. It always comes back. Sometimes spending only a few $1,000s, sometimes you have to spend $20,000, but it depends on the situation. It depends on what house you own, depends on where you are. But I can promise you, these small changes can go a long way. And I've never failed to not get that money back. So I include that in my market analysis. So again, just reach out and pass this video on to anybody else who might be interested in real estate too. Have yourself a wonderful month, and I'll look forward to seeing you in July.